SP500, I have an indication of 10% up for the next 200 days. That's my purple line there. And, well, that's my similarities analysis that we are going to see right now. So this method takes the last period as a reference and look into the past to find some similar patterns to have some indication on the future. The similar patterns are displayed on this window, and I have the reference, which is the last 450 days in red here. On this window, we have a statistical analysis of the here 10 curves with the average in green, and in blue we have the probability cone, which are the each line is the different deciles. All right, this is a long-term analysis with daily data. It focuses on the next 6 months to 1 year period. Okay, so I have a 450 day of analysis. It's the whole up period since October 22. I've asked my algorithm for the best 10 curves. And what is interesting is that I have data from up to 1950. So it's 18,000 lines of data, which is quite interesting. So I'm going to filter the badly fitted curve. This one is good. It's the best fitted one for my algorithm. This one is okay. This one is okay. This one is not really well fitted. I will delete that one. Okay, this one is okay. This one is okay too. This one is okay too. This one is not really well fitted. There's a miss here, but the general shape is really not the same. I will delete that one. This one is okay. It's quite well fitted, but it's 1987. So it's the crash of 1987. It's not really an exogenous event, but it's very special. So yeah, I will delete that one. And this one is not really fitted. So I have 6 curves. This first one is really nicely fitted. We have here higher highs and higher low. It's a nice upward trend, and it's quite coherent with the slope, the general slope of the curve. So it's a really nice one, and I think we are actually in that case. Sorry. The second one is not as well fitted. Here we have a miss. So to have a push like that, we would have needed a deeper correction in red. It would have been if we had like a 10% correction, we could have had a push like that, but it's not the best scenario, the most probable scenario. The third one, we can see that here we felt that it was too high, too fast, and we had a correction here. So I draw your attention here on the volatility side. There's ups and downs quite quickly, much more quickly than the first curve that we're going to see after. All right. And we have again that example here. A lot of volatility gives a flattish period. All right, next curve, it's the same thing. More volatility gives a flattish period. And the last one is the same volatility, flattish period. Okay, so what's the conclusion? So on average, 10% over the next 200 days. All right. But we have to watch carefully the behavior here. We are very similar to that August 2013 case here. We have to continue monitoring to see if we have higher highs and higher lows with the same type of volatility here, and not fall into this case where it could lead to a flattish period. All right, that's all for me. Thanks.